JB here, May 21st, 322. It's fine Wednesday. Talk quick about the market. Some names I'm looking at go from there. S&P is right at the lows right now. SPY's at 582.22. S&P down about 1.75%. It was already in the red coming into the afternoon, but then there was the 20-year auction, treasury auction, uh, and it came in weaker than expected. I mean, there's all these terms. I mean, the bond market's the biggest market, right? But there's all these terms with it, right? Bid to cover, the tail, whatever. I don't pretend to be an expert in any of those areas, but the big bid to cover was a little less than expected. So I think it was like 2.5 or so, or 2.47 versus 2.52%. And that's pretty much the amount that was bid on versus the amount that was accepted. So that was somewhat normal, but then it was the tail, right? The amount the folks paid, which is like a 5.02% interest rate versus a 4.97 estimates or something. So it just added fuel to this whole fire that's been going on over the last couple of days in regards to yields. And it's funny, back in the summer when we had the yen carry trade, right? The whole, well, I wouldn't say the whole, but a lot of the sell-off we had with the big move in the summer happened because uh of Japan. And here it is again. I'm just, the more I start looking at everything that's going on, the more I think that it's going to be pretty easy to create like a gap down tomorrow just based on uh the headlines. People are going to be talking about it, and you already see them crafting these articles to to create the FUD. I shouldn't say create the FUD, because I mean, obviously, if the rates continue to go up regardless of what's going on, right, it'll be like a snowball rolling downhill, and then it's got repercussions for everything, for especially equity. Equities don't do well as rates go up, right? The more rates increase, the more the higher the costs are to borrow, and especially some of these growth names. It's not a slope that we want to. I mean, me personally, but I don't think it'd be good for the markets. And now it's like this week there's not much in the way of catalyst, right? I mean, tomorrow we get the PMI data. We already got some of the retail earnings out of the way: Lowe's, Home Depot, Target. So I mean, there's not much that that catalyst for the market, and because of that, now pending any crazy announcement tomorrow or Friday, I mean, it's like the path of least resistance now. Well, we broke 586 here on the SPY. It's probably further to the downside. So I hope not. Now we got to start looking at some areas. 577 on the SPY. That was the level we hit on last Monday with that gap and run after the China U.S. deal, or agreement, excuse me. But yeah, I mean, so now you start looking, and the thing with Japan's already been out there, right? It's like the fifth biggest economy on the planet, the second biggest in Asia, obviously with China. But I mean, they've been, I don't know, it's like 30 plus years of zero rates, right? It's one of those countries, probably the first that had the growth issue, right? That they are not replacing their citizens as fast as they're dying, right? So that stymies your growth, right? And then if you're not more productive or efficient, that stymies your growth. And so they've been at like zero rates for a while, and then they just got like a surprise prime minister back in the fall, and that person is like a hawk, right? A fiscal hawk, probably wants to you know, um, wants to rein in expenses, and just not good for for if you're want accommodative measures, right? If you want stimulus, that's the reverse of it, right? So with that being said, now you see it's kind of like rearing its head, and you saw headlines, and not that I mocked it, but it was funny. I think it's the 30-year hit historic highs in Japan right now, after the U.S. Did their 20-year auction at 1 o'clock. Uh, but it just goes to show how their yields haven't been high to begin with. So now as they continue to ramp, it's like it's going to reverberate across other places here too. So. Uh, yeah, probably don't want to post that. So anyway, needless to say, well, hold on 1 second. Sorry, folks. Let me just uh so anyway, we'll see how things play out here. If there's good and bad, like the good first, the Baidu trade this morning, of course, I would have loved to have traded it and held it. I thought it was going to head over at least 95 once it broke to 100. Thankfully, locked some of those in for 100% and then closed the rest as it started to tumble. And then on the flip side, I mean, some of the positions I wasn't overly aggressive this week, but just frustrating here today, especially on a Wednesday, right? It's not like it's a Friday where premiums are less, or Monday where you can start to buy the dips. It's and kind of, I wouldn't say it's out of left field. I mean, knew the auction was coming at 1 o'clock. Just yeah. So anyway, we'll see how things play out here today and today afternoon. I would not, to me, I'm still optimistic, but I don't want to, I'd rather play dips as a lieu of getting loads of puts, right? I don't know how much further downside we'd have here. So to me, I'm just watching levels. I thought 586 to 597 this week. We broke under 586. I got the SQQQ calls, and I'll continue to look for small opportunities to hedge while playing some bounces. So that's kind of the overall market. Just disappointing. It's funny, at this time yesterday we were weak, but we were reversing and then the VIX was red, right? So today it's a different story. And was it? I think the Dow's down the most in a month. I think it was April 21st. So it just kind of shows you, and we've been kind of immune to some of these big swings. So I just hope this is a one-time thing. We get some headlines. Maybe we get a gap down reversal tomorrow, and then we could put this yield situation behind us, or at least find some footing. And the other thing is too, it's like, I was saying it the last couple of weeks too. It's like, it's not like the Fed isn't at 4.25 to 4.5% on the rates right now. So there's maneuverability if things got crazy, right? And a lot of it's this tax bill. And again, it's like, it seems like if you go back, and I don't have time to go and scroll all the articles from all the times we've done these tax bills from every administration for the last 12 to 16 years. It seems like everybody's always overspending, and there's always this talk of kicking a can down the road. One day, the rooster's going to come to roost, or whatever you want to call it. I don't, you hope it's not one of these situations where this is the time. I still don't think so, but like I said, I no one can say without 100% with 100% conviction that without 100% certainty that this is not it, right? So until I can, still got to be in a position to be open to both sides of the market. All right, so that's overall market. And then I just posted, this is the 10-year yield. So what, just before the 10-year was at levels not seen since February of 2025. So it helps keep things in context when you see all these articles about, again, the Japan yields hitting levels, historically high levels. And I think it was 2006. I think that's the date it goes back to. So we're not going back to 1920 or whatever. So, and it's funny, gosh, I remember when, I don't know if it was back in the COVID days, they were starting to thinking of coming out with instruments, 100-year treasuries, right? Because yields were at such low levels. And then, negative yields on some years in Germany, the Bund was negative. It's like the bank was getting paid for you to hold the debt. Just, all right, rants for other days. All right, now just individual, and take a look at VIX too. Again, helps keep things in context here. It's not like it stinks these down days, but I don't want to sit here and say, hey, we can't continue to go. But I think, again, made for how I look at it today is, I think possibly, but setting up for some kind of gap tomorrow, or red open, and then a reversal. That's kind of how I look at it. And then we have to worry about the 10 o'clock PMI. Pending any crazy shenanigans. And then take a look at the VIX in the context of all things, nothing too crazy. All right, so just individual names, and I've done this since Liberation Day. The SQQQ calls have paid handsomely as hedges more times than not, and when they do, sometimes they paid out substantial. So sitting here watching the SPY break, I was looking, NASDAQ was up like 1% today, it was in the green earlier, and then reversed. So I thought, hey, great opportunity. It looked inexpensive on a risk-reward basis. And now you look at the volume on the call side, it looks like a lot of folks are using SQQQ as a hedge now, because insane volume. Let me see. I didn't even pull up the last update. Yeah, 200,000 calls traded, 20,000 puts traded. So, I mean, substantial. So already locked some in just to cover some of the costs, because you never know. Again, nothing's certain, but at least I have some protection if there is some kind of gap down tomorrow morning. Because if it is, I can see SQQ trading into mid to high 25s, if not higher, which make my calls a couple 100%, and then at least will offset some of the pain and maybe make some money as well. That's that. And then Baidu, right? Disappointing. Early this morning I was on the rant talking about Baidu. I'm like, sometimes I just don't understand it. and well, I shouldn't say don't understand it, but a monster beat, right? Great report, but then talks of overspending $1 billion churn trying to get the AI going and the cloud and what have you. And then it's just like maybe there's underlying things, and I was calling it the Yahoo of China earlier, and I used to call it back in the day, but maybe there's maybe that's it. Maybe it's time as being a leader is kind of waning, and it's probably never going to perform like it used to. So I got to keep that in the back of my head. So thankfully, got the opportunity, got the spec calls, closed some out for 100% to cover costs, and then closed the rest on the way down. I don't even know if I'm going to revisit that one. It's just disappointing. And funny enough, you look at the 50 and 200-day moving average right there at $89. So that's kind of, I was struggling there for a while, and then it finally broke, and I pulled the ripcord. So that's that on Baidu. Deck was holding in there, and I'm still solidly red, and my calls are still solidly red. So I'm probably just going to hold them into earnings. We'll see what tomorrow brings. Disappointing again. I was hoping for a run and gun into earnings. Tomorrow's another day. Same with Biogen. I mean, it was looking great yesterday and day before. 131 yesterday. I could have locked some of my calls in. I held them. Still holding the 50-day moving average at 126 and change. So hopefully that holds. And that's it. I'm trying to think of some of the other names to watch. I mean, it was funny, like Google this morning. It's like sometimes you have these investor days, or they had their IO conference, and you look at and you're like, wow, maybe it's an opportunity. Some of the announcements, it gets digested overnight, and then the next day it rallies. Seen that with Apple before. Kicking myself for missing that one. Uh, Trying to think of some of the other names that are disappointing. Uh, Fubo, uh, Palo Alto. I was actually, interesting. Someone posted the CrowdStrike earlier. Just who remembers the whole airport fiasco? All the airports around the world, all the software just killed CrowdStrike, and boom, back to almost all-time highs today before pulling back. Palo Alto also, it looked like a bounce play this morning. Thankfully, sat on my hands there. Yeah, I think that's it. I'm trying to think of some of the other things, but in this environment again, it's kind of like back to the playbook. Be open to both sides. I still am cautiously optimistic. Especially tomorrow, and then we head into Friday. It's a long Memorial Day weekend. Some opportunities maybe for some lottos on Friday morning. And that's it, folks. Let's have a great day. I'll be back rock and roll.